Welcome to the London Property Podcast, your go-to source for navigating the complex and ever-changing London real estate market. Our digital marketplace provides informative and educational content from industry leaders through podcasts and videos. We cover various aspects of the real estate experience, including buying and selling, finance, law, tax, construction, design, and more. Join us as we delve into the latest trends and developments in the market and gain valuable insights from our panel of experts.
Hello and welcome to London Property. I'm your host Farnaz Fazaipour, and today we're delighted to introduce Rudy Mehta of Rockbridge Lending to the show. Welcome to the show.
Thank you. Thanks for having me.
I'm going to pass on to Rudy to explain in more detail what Rockbridge do with regards to private finance and how that fits into our super prime property market. So tell us more about what you do, Rudy.
Sure. So we are private credit lenders. We are multifamily office sort of structure. We do a lot of bridge financing in the UK only towards unregulated loans. And we lend against special opportunistic opportunities that kind of occur. We are not your mainstream bridge financiers. We look at deals which tend to be out of the box. And what I mean by out of the box, and the reason for saying out of the box is because we sort of focus on slightly more complex opportunities where your normal lender or mainstream bank would not sort of jump on.
So the first question I have for you is, what is bridge finance?
So bridge financing is financing which is short-term primarily, slightly more expensive than banks or other specialist lenders, and tend to have a sort of purpose. And what I mean by purpose is literally bridging a gap between two events, whether it's refinancing, selling a property, or other means. Now, in the past few years, bridge financing has sort of evolved into specialist lending, but for longer periods. And what I mean by longer periods, essentially, bridge financing was a 1 to 3, 6 month gap. Now, because of the market drying up from mainstream lenders, people are using bridging for longer periods, up to 18 months. I think is your typical loan duration in bridge financing. So yeah, that's typically what bridge financing is.
And how does it work? So if a person, how does a person realize, okay, my solution here is going to be bridge financing, so that's what I should go after? So how does it work?
Well, firstly, we don't lend to consumers. It's all unregulated loans, so corporates, and they tend to go to bridgers when there is two purposes. One is, and we're literally bridging a gap between two events, and they come to us because mainstream banks and lenders are very slow. And the whole purpose about bridge financing is that it's quick. It's essentially plugging in a period of time where they need the funds for, and they come to us because we're quick. Definitely more expensive, but essentially it has a much easier and streamlined process than mainstream banks. And I think essentially that's what the whole purpose of bridge financing is.
And as an organization, in order to enable you to make these decisions quickly, first of all, let me ask that question differently. So we're here talking about the context of bridge financing with regards to prime real estate. Mm-hmm. So using that as an example, what are the factors that help you in understanding that market and being able to make these decisions quickly? Is it that, the family offices that provide the lending are actually all real estate professionals anyway?
It's a mix. Because we don't tend to look at essentially only prime residential properties. In fact, that's what we look at least, just purely because we focus more on companies, whether they're refinancing their debt, whether they're trying to bridge a period of where they need certain cash flows in place for acquiring another company, or whether it's a developer that needs extra working capital to finish a project and then goes to get refinanced and repay us back. So we look at various different elements of bridging. So yes, we tend to have a very commercial view, whether it's residential or not residential. We're open to anything that sort of makes commercial sense to us.
And so what is that process that a person or a corporate goes through when they need the financing? And you said that, it can be anything from 3 to 6 months. And now with the changes in the market, it could be up to 18 months. So what's that process that they have to go through in order to put the financing in place?
I think it varies. It varies from lender to lender. We are private lenders. You kind of sort of talking when you borrow off us, you're sort of talking to the ultimate decision maker, and I think that makes a very big difference because there's no red tape, no bureaucracy. One phone call to us, I will tell you whether I could pursue the deal, and if I'd be interested, obviously, then we'd look at the numbers, we'd analyze the deal, we'd analyze the asset. And if the terms are agreed on both sides, we would then take it into legals. The legal team, our lawyers would obviously be in charge of carrying out all the due diligence, all the processes in place, so that they meet our requirements. And if that's the case, we would then take it down to drawdown. We've done deals, we've completed very complex deals in 5 days, 6 days, working days. And, we've also seen deals which have completed after a month and a half due to complexities.
Okay. And what is the sort of deal size normally for you? What would be the kind of sweet spot?
Yeah, good question. Our sweet spot is 1 to 5 million pounds. Whether we fund it or whether we co-invest with very close partners. We are very grateful to be working with just 2 or 3 very close partners that sort of we have a very good relationship with, and we co-invest in deals as well. So if, for example, we're unable to fulfill the ticket, we would then reach out to our partners
to do more. And what would you say is the market rate for bridge financing?
Again, it really varies. It varies on how big the lender is. It varies on how aggressive the lender is and what kind of investment parameters the lenders have. We are on a slightly more expensive scale, where our minimum is about 1.25% a month, and we have gone up to 5% a month. It really comes down to the deal itself, the asset, the risks, and the security.
And in the current climate, where do you see the deal flow coming from, or is it too soon to tell?
Oh, no. We work very closely with 2 free brokers, and that's it. And then it's sort of word of mouth and repeat clients. I think that's where the strength lies, is when your client is very satisfied with the first couple of deals, and then they keep on coming back to you, and they're happy to pay slightly more of a premium because they have done work with us before, and therefore they know how we operate, and we know how quick we can complete a deal, and how reliable we are. And I think this is where our strength lies.
Right. And are you seeing any changes in the marketplace at the moment? Because I know that, from where I sit, we're talking about a lot of people whose fixed rates are going to expire. the market doesn't seem to be reacting the way one would expect it, where interest rate was taken down, but mortgage products were taken up. So are you seeing any kind of a calm before a storm, as it were?
We're not as sensitive to that because we don't lend to primary homes or residential homes. So yes, we're seeing people or corporates waiting now on the sideline for rates to come down and get refinancing in place. But where we see complexities is actually exits. So people waiting for deals to be completed, because don't forget, when they come to us, our time frame is anything from 3 months to 18 months, and after they have to exit, whether it's a sale or whether it's a refinance with a commercial lender, they have to exit. And I think those deals are taking longer to complete, which means that they are slightly taking longer to come out of our loans. Whereas a couple of years ago, it was very swift.
Right. So you might end up having your money stuck in a deal for longer than you expected because of the conditions of the market.
Not much longer, but considerably enough to have an impact on their exits.
Yeah.
And I'm also finding that lawyers are working at a very different pace to what they used to pre-COVID, which means that deals take longer to complete.
Right. That old chestnut.
Yeah.
Lawyers and transactions of real estate.
Correct.
Okay. So for our listeners today, I think we've answered most of the questions, the deal size, the time that it would take, and the sort of cost. We didn't talk about the cost of it.
Well, the cost...
I mean, it can be obviously a range because it's going to be case dependent, but
it's really case dependent.
It really to have an idea.
It really is case dependent. Again, we charge. It comes down to the security. It comes down to the borrower. It comes down to various elements. But the cost is typically anything from 1% to 3% arrangement, no exit. And of course, there's all the legal fees surrounding the transaction. And I think that's pretty much, sometimes there's valuations that have to be carried out. And that is an extra layer of cost if that is a requirement.
So you always think of bridge finance as a time where people are kind of in a desperate situation. But actually, sometimes that can just be that they're taking advantage of a situation and realizing an opportunity by trying to act fast.
Absolutely. So bridge financing is not essentially that anymore. Bridge financing is used, specialist lenders as a whole are used all the time. Whether I think it's purely because we, as private lenders, make things a lot less complex, or we try to make things less complex because we have experience in finance. Whereas I'm not saying that the person working in a bank doesn't, but ultimately we sort of understand transactions a lot better than banks. I find, and I think that's where bridge financiers or specialist lenders, I would call ourselves specialist lenders, have benefited of that.
And before we thank you for your time and say goodbye to you, do you have a success story you can share with us? A prime London property story, if one comes to mind.
Yes. So in London, we sort of acted very quickly with the borrower, which needed the funds to acquire and complete on a house in Notting Hill. We got that done in 8 working days. The borrower sort of came to us, said, this is what we have, this is the opportunity we got. We looked at it, we saw that security is fine. We got it completed. And that was a sort of relatively complex transaction because there was offshore companies involved and, sort of mix of different elements of due diligence were required to get that done. So we got that done very quickly. That's down to obviously our experience and our team that managed to put this all together and get it done quickly.
Okay, so basically what I'm taking away from our conversation is in order to go for this specialist lending, you need to have the opportunity that needs to make sense. There needs to be an exit in sight. And
I mean, if all these things stack up, then we are obviously always happy to consider new transactions. But, what happens a lot of the time is that the borrowers come to you or the deal comes to you. It looks very attractive on paper. And then when it goes into legals, things look very differently. Hence why, sometimes you got to take things with a pinch of salt until
you dig deeper. And just to finish off, apart from real estate, you did mention some other businesses that you do lend against. But just briefly, if you tell us, what are the sweet spots that
Sure.
your company covers?
So we essentially always takes bricks and mortar as security. However, we have done we've taken different securities as collateral in the past. We've done share charges, equitable charges, mezzanine financing, and obviously senior debt as well. So, and I think this is where we've sort of benefited from being open to different opportunities, because we've had, sometimes our most successful deals and returns have come from us taking more risk, but they have been some of our most straightforward loans. And sometimes when you take senior debt and you think it's a home run and there's no issues surrounding it, those could be the ones that end up in trouble sometimes. So it really comes down to the transaction and whether you analyze the borrower, the security, and various elements around it.
So we've spoken about the market conditions and the sort of cost of having structured borrowing. But to give us an example, can you tell us about some transactions that you've lent against in the recent past?
Sure. So we've done various different deals. Every deal is very different. We've lent against land before pre-planning. We've lent against refinancing a biogas business, an acquisition of steel companies. We've even lent funds to a school, a boarding school outside London, to finance their art center. So we look at all sorts of opportunities. They're not all necessarily straightforward, but yes, that's pretty much what we lend against.
I like the land without planning one.
Yeah,
you might have me knocking on your door more often than you want.
We see a lot of those. Yeah. We don't necessarily pursue all of them, but if the scheme...
How do you take that calculated risk?
It comes down to obviously how much they require and what they require the funds for, and how long. Because sometimes, obviously, when you invest in land, it takes a long time to obviously achieve what they want to achieve. But the reality is, if they come to us and say, okay, we want to acquire this piece of land, we're going to be going for planning. Once we get the planning, then we'll take you out. So we sort of look at that and see whether it sort of fits our parameters.
Well, it's been very insightful. And I think sometimes, having access to money at the right time, at the right place, even at higher costs, does lead to some great opportunities being unraveled.
Absolutely.
So at least now our listeners have an idea where to go to if they find themselves in that kind of situation. Rudy, thank you very much for your time and for talking to me today on our show.
Thank you, Farnaz, for having me.
We hope you enjoyed that insightful conversation as much as I did. If you have got any challenges and opportunities that need financing and you'd like us to connect you with Rudy, then do please get in touch and we will help you any way that we can.
Thanks for tuning in to our latest episode of the London Property Podcast. Head over to our website where you can browse our exclusive network of top experts driving the market. As a member, you'll have direct access to our experts and their networks. Our award-winning content will help you choose the right professionals for your needs and make informed decisions about your investments. Personal recommendations are a powerful tool in connecting with trusted professionals. Let us introduce you to the right people to help you achieve your real estate goals. Contact us now to learn more about becoming a member and gaining access to these valuable resources, or joining our directory of experts.